introduction. I would like to actually ask my panelists to come to stage. So Jochen from Earlybird, Juliana from EIB, and Niklas from ROI Ventures. Please come to stage and round of applause, please. Please be seated. All right. Last call for the people on the coffee break to hear this interesting panel discussion. So, okay, let's get into it. So today's topic is to talk about the data-driven value creation and portfolio intelligence. And on the panel we have, I would say, one of the largest investors in Europe, by default European Investment Bank, and with a large portfolio, Earlybird again with a large portfolio, and ROI with a very progressive approach and data-driven approach to portfolio management. So I think this is going to be a very interesting discussion. Actually, maybe I'll give you one sentence to introduce your companies, at least so we understand the sizes. If you could share the portfolio size and maybe number of funds, so at least we know what numbers we're talking.
Yeah, hi, I'm Jochen, Earlybird again. It's roughly 1 billion that we manage in Digital West, and we have, with all the legacy and opportunity funds, like 15, 16 funds.
Hi, I'm Juliana. So we are working within the EIB. However, we are investing in the name of the European Innovation Council. Our fund currently has deployed 1 billion in 250 companies, but we're going to reach roughly 5 billion by the end of the investment period.
Hi, I'm Niklas, part of ROI Ventures. We are a pre-seed angel fund doing tech and deep tech investments, pan-European and US-wise, and we're operating since 1.5 years and have done 22 tickets so far.
Thank you. And actually, there are additional microphones, so we'll optimize this right away. Okay, so let's start with the first question. And the topic is, to do effective, portfolio support and portfolio management, you need to have the data, right? So how do you set the expectations with portfolio companies when they enter your portfolio, right? So how do you make sure that the communication is on top, and how do you bring them on board to so they interact with you effectively?
Yeah, we're going to try this one. So thank you. At the initial stages, we would first discuss with the companies pre-investment, making sure that they are aware of our reporting requirements. And once they are actually invested, we would tend to have quite open and proactive communication. So we would provide them with guides about how the platform works and what exactly we're expecting, the methodology. So far, this has worked fairly good for us. Also because we basically give them a heads up about what our requirements are. And this also allows for a more streamlined, everything is in one place, everything's easy to fetch, and afterwards to get insights from. So for us, currently this works.
We're like usually the ones coming in really first, investing also in kind of stealth mode with the teams. So we're the ones helping them set up first structures, all the first reporting setup. Therefore, for us, we don't need to track a massive amount of data. We either help them to provide the data then for the later stage investors or for the follow-on investors coming in a real pre-seed round, seed round, stuff like this.
Yeah, mostly same for us. First, they're legally binded to report to us, so on quarterly basis. That's one thing. The other thing is what's happened operationally. So some stay with the deadline, some not. What I try to do when I start to really connect personally with the CFOs, that I have a contact point and we try to get closer, because I'm a CFO, I'm not investment team, so we don't have daily connections or weekly connections with them, just mostly quarterly. So what I found out is still that the personal connection, to send a smart reminder, hey, can you do it? Can you do it on time? Do you need more time? And mostly when you ask, do you need more time? They say, no, we do it. And then it works. So yeah, but the base is contractually, but the solution mostly is personally for the ones they struggle.
So all of you have it in contracts that they have to report. That's a legal binding. Okay. And how do you then treat those situations where perhaps you have some data inconsistencies? Do you have any kind of strategies how to mitigate this? I mean, one thing is when you can do reminders, but when you see maybe some data that is not fitting or is not right, how do you approach these situations? Liana, you can start.
Yes, we've started noticing this since we onboarded companies, that there are the chances of inconsistencies in the data. So currently we settled on a 6-month check process where we do like a sanity check of the data to make sure it aligns with our methodology. And whenever we see deviations, that means that the methodology is not applied, we do tend to have a personal approach as well and just to reach out to our reporting contact, usually an investment relation person or the CFO, depending on the size of the company. And then we discuss personally to understand exactly what they filled and if it follows or not what we were expecting there. So currently we've received quite a good response because the personalized emails do help. So hopefully it's going to continue in the future.
Yeah, maybe to add on that, what I found out is that sometimes also clear instructions are missing. Like we have this very famous cash burn rate, where we found out that some report negative numbers, some positive. And this is just because a clear guidance from our side was somehow missing, because if we call it operational cash flow, it's clear, it's negative or positive, but cash burn can be both. So that was one thing we worked on to give really clear guidance to the portfolio companies. The other thing is we found out that the numbers reported to us via our fund reporting tool, they differed from the numbers that the investment team was using for making the comments on the company. So we changed that process and we now provide the investment manager the reported numbers to us for their bullet points. So they do the cross-check and they clear any deviations from the numbers we had and they received. So that also helps them to ensure a general understanding on the portfolio company side. Yeah, and that helps us a lot to have that double check internally.
Nicholas, if you'd like to add?
Yeah, as we are the first ones. As we're the first ones coming in, we sitting together in the kickoff event and figuring out which metrics, KPIs, and in order to track their growth and track their outcome. And then we work with each of the teams at least on a bi-weekly basis with some certain short sprints. And that's why we are very closely related to the teams, especially within the first 6 months. And there we can push them a lot to report the information we want to see.
And you mentioned the KPIs. So how do you guys approach the diversity of KPIs, right? So do you have maybe like standard 5 KPIs you kind of apply to the whole portfolio, or you take it kind of more on a custom basis? How do you approach the KPI setup in this way?
Then I start. We have like a basic setup we want to see, but also the teams and the startups have the possibilities to show us which KPIs they, in their opinion, need to track in order to show growth and in order to show progress. And we are not investing on our own, so we're only investing together with other investors, and then we figure it out together also with the lead investor which one to really track and which one to go for.
On our side, we settled on a same configuration for all the companies because we want to be able to gain insight from all the portfolio, and having such a vast portfolio would also mean that the iterations of configuration would be too large to actually extract relevant insight. So we currently settled on 9 quantitative KPIs that we request once a quarter. Qualitative data through open questions that we request every half a year, and of course any files that they are legally obligated to provide for us, like financial statements once a year. But it's a one size fits all for us.
So standardized for the whole portfolio, okay?
Pretty much the same for us. So we have a standard set of 13 metrics that will be reported, and individual KPIs are reflected in that specific comments from the investment team. Like we've always, in the reporting, like we have a table with the 30 numbers, quarter by quarter, looking back for, I think, 6 quarters. And in the comments, we have 3 to 4 comments on the company addressing some specifics.
Right. Okay, so now we kind of got the data. Now, how do you work with the data with the partners in the fund? So let's say you see some kind of negative trend in those numbers. So is there some kind of process, or how do you enable the partners or the investment managers with this information?
So we currently mostly just started setting up this process, so we're still building the foundation for it. One aspect that we are currently already collaborating with the investment manager on, as through the qualitative questions, we also obtain information about the struggles in fundraising. So we would discuss with the investment managers potential options in terms of who would be suitable from our co-investor network to present the company to, so that make the necessary introduction so that they can close the funding rounds. But as the infrastructure develops, we do aim to gain more insights in order to create corrective actions whenever negative trends arise.
Nicholas, if you have something to add? Or?
Yeah, we have like also very special in this case. So also with our partners, I mean, there is everyone everyone is or has an insight on every topic of this. We're only 5 people working around with this specific topic. So I think it's more interesting to hear how Earlybird does it.
Yeah, we are more than 5 people. So there are two sides that I have to mention. The first thing is from the investment management team, which is regulatory called portfolio management. They have the venture case in mind. So that means we spend 10 million and want to make it to 100 million. So this is one thing where we really have a look how the venture case is going. Is there a pivot needed, or what the team is doing there? This is something really on that side. On the other side, I, as CFO, I'm more on the risk management side. I'm responsible for valuation. That means we use that IPEV methodology, meaning we have the price of the recent investment as methodology. So I always have to see, okay, the 10 million, can I get the 10 million back? So do we see that at risk? If the venture case is dead, okay, that's bad for the fund, but first not for the valuation. For the valuation, we have a problem when the 10 becomes 5, because we need to reflect that immediately in the fund and show it to the LPs. So this is something we try to level in the company. This is also that we get closer connections. As I said, we now share the numbers, we have an open discussion, and what we do from the finance team and the valuation part, we always do evaluation based on our assumptions, and we say, okay guys, here we have the very critical cases, let's talk about that. Should we move them to, we call it no money, no time, yeah, because it's normal you invest in 30 companies, 10 turn to be out good, and the 21 you lose, and we have the goal to identify them as soon as possible to save money, double down on the winners, and time for my team to focus on the good ones. So this is kind of our primary job to tell the guys, okay, I think we are done with that one, you should focus on the other ones. And yeah, the upside potential is mostly not reflected in the reports, because what I learned, being with private equity for a long time, with 1 year in VC, you stay with the price of the recent investment. When you do upwritings without having a new round, that is seen very skeptical by LPs and the market, even though when we have improvements like external rounds or multiples, we do that sometimes, but it's really, people don't really trust on that numbers. It's more about DPI. So we have really the downside, it's a first glance, and then having indications for checking the business model and pivots. That's something we try to point out when we see something, but to cover that, it's with the investment team. Sorry, that was a long answer.
No, but it's great. Thank you very much. And what are the challenges you see with building this? I'd say the single source of truth. Of course, one is like working with the portfolio companies, but what are perhaps the other challenges that people should be aware when building these processes at a fund? Maybe each of you could comment or share some ideas.
I guess I can start. Some of the key challenges we've identified is trying to transpose qualitative data into quantitative data, because a lot of the critical early stage data would be in qualitative form. So what we've settled on was create in-house methodologies that our senior investment managers can assess the open questions or discussions with the companies, put them through the methodology, and then basically come up with a quantitative figure that can be introduced into the system and easily tracked across the portfolio.
Maybe just so I understand you right, so you have qualitative information that you transform into
Yes.
quantitative.
Yes.
Could you tell us a little bit more about the methodology there? Like, it sounds very interesting.
Well, it depends a lot on the metrics, but you have it because it's quite a descriptive methodology. But for instance, we are rating companies in terms of their ability to fundraise or not, and this would be like we would have a set structure. Like, are they struggling to find a lead? Are they can't find like they can't get signed term sheets? They're just struggling to raise up to the current level that they would want. So it's a lot of different information that goes in order to basically create a quantitative number that can be tracked across, because we can't really track qualitative data for more than 200 companies. So we had to find a middle ground, but it's definitely a challenge trying to fine-tune the methodology for different metrics. And then I guess particularly on our side, one challenge has been also creating the IT infrastructure for all of this. So also coming from a public institution perspective, it was a bit more slow in adoption, but we are definitely making progress here. So for the past year, we've definitely made significant headwind in this. And I guess one of the other aspects would be probably like the data lag that you need to kind of account for whenever reporting comes in place with the companies. Until you get them motivated and accustomed to the tool, there's going to be a bit of a lag when you onboard. So for us, those would be the main ones.
No worries. We are like using quantitative, well, let's see, start otherwise. Qualitative data we use to like do short-term shifts and navigate the company on a short-term basis, and the quantitative data we use long-term to either help them raise the next fundraising round, or for us to then use this historical data to build our own data set and evaluate which to go further or not, and to shape our direction. And for us, the biggest challenge is at least to set up such a data model and to evaluate on it. Like, we're operating 1.5 years right now, so it definitely will take us at least one and a half years to then evaluate if the things we're doing right now and the models we're testing right now really work out, or if we need a different direction and need a shift there.
Not much to add here. From us, also the timing is something. Like, we have 45 days to do our fund reporting, which is standard in VC. We gave our portfolio companies 30 days to deliver the numbers to us. So it gives us 15 calendar days, not working days, to set that out. So some are delayed. So the question is always what you do on the day of the deadline when the reports are not there, or then you found out that it's not consistent. Do you report inconsistent numbers? Do you change it in the next report? That causes questions. Sometimes we get just estimates, so this timing factor is stressing all, because everyone wants timely reporting, but also reliable reporting, which is, well, not always easy to combine.
Thank you. We actually have only a few more minutes left, even though I have a lot of other questions, and there are some questions on Slido. But Nicholas, if I could ask you you're working on a co-pilot currently at your fund. So could you tell us a little bit more about that? I think this can be quite interesting how you're approaching this, the AI topic. And I'll have this AI question for you guys as well.
We thought like, which part of the whole investment process is the one we have the biggest lags? And in terms of sourcing and getting a deal in the due diligence phase, we're quite good. Within the network we're sourcing the deals from, we're also using like LinkedIn Sales Navigator, Phantom Buster, stuff like this. But for us, the most crucial part was to be really fast within the decision making. And I wanted to stop adding all the data and information manually into our CRM, and therefore first started to build some kind of workarounds with Notion, Airtable, stuff like this. But then we also gave other tools a shot and figured out they don't are really convincing to our needs. So we started building our own, and what we now do is like there are LLMs generating and scraping all kinds of data from different sources, then evaluating in terms of different prompts on how we want to do it. We've built a database behind that also builds a separate layer on this, And so the whole workflow is streamlined and automated, that we are able, like in most of the cases, we even have to decide within 1 week if we're doing the deal or not, otherwise it would be out. And so we can be pretty fast and have as much information as possible within our own system. So even the CRM we build in-house, and that enables us, hopefully, to do faster and better decisions.
Thank you. And Jochen, Juliana, how are you looking at the AI opportunities in terms of the portfolio management or maybe data collection? Do you see any AI applications there, or how are you thinking about applying AI in your work?
We are not currently exploring, however, it's on our roadmap for the future years to start looking at it. We are sitting on a very large quantity of data. So it's going to be very interesting to be able to assess all of this retroactively and understand what exact factors contributed to the success of the companies. This is one of the aspects which we are considering to use this, but it's going to be more in the future because currently we are still very much in the early stages of setting up all the process.
I mean, what should I say after Andre speaking for an hour? So maybe the part where you did not speak about the fund management. So I come from a Microsoft-infected company. So now I joined VC, which is totally influenced by Google. What we implement now is we started working with Snowflake because we have a very old-fashioned accounting system, so-called DATEV in Germany. It's on-premise, it's unbelievable. So we pulled out all the data from there, and we try to use the power of Snowflake now because for us it's cheap because it's pay as you go, and we try to get all these things with like chatbots on contracts. I'm thinking about master data management, aligning those, getting dashboards. That's why I like the approach from Raspberry, that we can get the data out. We have a fund management system. It's not that easy, you know that, guys. So this is something I try to use big players because I think computational power will be the shortage. You can have smart ideas, but you need the power in the future. So I try to have something where I'm sure that I will have the power. I will have someone who's pushing the trends, and I can just use it. Because we have mostly standard questions in fund management.
All right. Thank you very much. We are just 2 minutes over, so I think we caught up with the time. And so thank you. Please, a round of applause to the panelists. And I will now let David to introduce next talk. Thank you very much.